Have you ever wondered why some of your trades work out better than others? Is it just luck? Or is it something that can be repeated? Trades that turn into winners every single time. In this video, I'll show you exactly the key to finding high probability trade setups. Every trade is unique, but there are common factors that can help us increase the chances of winning. And the most important one is confluence. Confluence is having multiple ideas that combine into one trading setup. However, most people don't know that there are actually two types of confluence that you have to look for. The first one is called time frame confluence. This is when you have multiple time frames lined up in the direction of your trade. The higher the time frame, the stronger the price action signals. Weekly charts can carry more significance than the daily, which in turn has more significance than, say, the 4-hour chart. When price action aligns across multiple time frames, the likelihood of it moving in that direction increases significantly compared to just one time frame. The next type of confluence can be found with technical analysis tools. By drawing out support and resistance levels, you're already ahead of most traders on this. However, these levels may not always work out in your favor, but by utilizing other tools like Fibonacci retracements, moving averages, or VWAP, you can greatly boost the strength of those levels. When you're in a scenario where you find that all of your tools line up or are pointing to one area, then that tells you this is a key level and the market is more likely to provide a favorable reaction here because there are lots of traders looking at this level that they found through various tools. So let me show you some examples and what this might look like on a chart. First, let's start out on the daily time frame. Here we can see that the market is trending up. It's broken above its swing high and it's gone on to make higher highs. Now it begins retracing back down and we want to look for a long opportunity. So if we use our FIB retracement tool, we can place it by selecting our swing low right here, then dragging it to our swing high, and this will give us our FIB levels. We can see that it has traded to the 618 level and started to move up higher. So with this in mind, the daily is likely to be bullish and start moving up soon. Now let's zoom into a lower time frame and look at the market structure there. Here we're on the hourly time frame, and we can see how it's traded up to a higher time frame 618 retracement level. It's provided a good reaction as the market started to move up higher, breaking past this swing high, and so now on the hourly, it's starting to look bullish too. Over here we can see that it's retraced a little bit back down before continuing up again. And by placing our FIB tool once more, we can see that it's actually bounced off from that same Fibonacci level again. Now let's look at current price action. Here, price has made a higher high, and with that, we can conclude that the hourly is now bullish again. As we continue watching, we see it retrace down to this hourly fair value gap. When this happens, we want to zoom in again to an even lower time frame. We're going to move to the 15-minute. Here, we are at the exact same point, but now in a lower time frame. We can use our FIB tool once again in order to find new support levels. Here we can see it lines up with our area of swing highs, which is now turned into our new horizontal support level. To find more confluence and to make this trade even better, we're going to turn to our other tools. For example, our 200 moving average is also in this key area. That's additional confluence. Now that everything's lining up, we're sure that this trade is a good one and has a high probability of working out. We can place the long order right in this area, putting your stop at a level just below and targeting levels higher for our take profit. Let's do another quick example. So for this one, we'll just be focusing on using different tools to find confluence. Here the market is initially consolidating. That was until it took out a swing high right here, and it began to move aggressively down, breaking its swing low. Now it's likely to be bearish just because of this. So we're going to be looking for short opportunities. If we take a closer look, we can see this fair value gap all the way up right here. This is our first resistance level, but we'll have to look for more. Once again, we'll use our FIB retracement tool and place it on the most relevant swing points to get our FIB levels marked out. We notice the 618 is at the same place as this fair value gap. That's another piece of confluence for us. Now let's use the volume profile because we have a clearly established range here. So select the first relevant point where the range started. In this case, we'll place it on the swing low right here. Then drag it to the candle just before it broke out of the range, right over here. Now we can see that the point of control sits between the fair value gap and the Fibonacci level. This is 3 levels of confluence for our short trade. We can place a short order here with our stop set above our local highs, and we can just aim for support levels lower. Now that you've got the tools, go forth and start finding confluence for yourself. If you found this video helpful, all I ask is that you please share it with a trader that might also get value from it. Smash the likes and subscribes and leave a comment in the video below. Tell us what topics you want to see covered next in trading.